Hello, my name is Annalay Ajooway, and I'm here from More Mortgage. And today I'm sitting with the wonderful Stephanie Lowe from iPro Realty. And we both came together because we wanted to make a quick video to speak a little bit about something that we find is a little challenge for a lot of people looking to get into home ownership. And that is accumulating a sizable down payment. So today we're going to share with you a few tips that we have found have helped many people to overcome that hurdle and get into the real estate market. So Stephanie, what do you have for us today?
Great. Now, we'll start here. We're always very excited when we have some of these great opportunities to share with you. We're going to talk about finding these low deposit or extended deposit homes. Okay. Now, typically, builders in the GTA or in the city are usually asking for 20% down. So if we consider a property that's 500,000, consider the price to value in in Toronto, let's say. 20% of 500,000 is going to be 100,000. So to be able to get into the real estate market, you're going to need to have $100,000 in your bank to move forward. For a lot of people, that is a very big barrier. Yes. So, what I do is I go out and research. Some opportunities I've found now, for example, are asking for 20,000 deposit. So, which would you rather pay, 100,000 or 20,000? So that's a very simple way of just bringing that barrier down. I have some 5% deposit programs available. I have some extended deposits. For example, it's 5,000 to reserve your lot. 5%, $1,000 a month. These type of things, again, just make it a little bit more attainable for people to be able to get into the market. All right, so moving on from there, I wanted to make sure that you guys are aware the next Thursday, August the 29th at 8:30 p.m., we're going to be having a webinar. In this webinar, we're going to go into more details on some of these low deposit, extended deposit opportunities. All right, we're going to review floor plans, pricing, location, rental market. We'll get nice and deep, and so that you can understand more about these opportunities and how you can take advantage of them. We're also going to go over some of the points we're going to cover here today about how to acquire that sizable down payment and other strategies that you can utilize to help you get into the real estate market. So we'll post the link. It's my7figurelifestyle.com. You can register there and then join us next Thursday, August 29th.
Great.
All right.
So what tips do you have for us?
All right. So we're going to start now looking at debt and debt reduction. Okay. So a tip I like to give my clients is have a look, write down what your monthly income is. Go ahead and write down what your monthly debt service amounts are. So the payments you're making to credit cards and other debts that you have. Now, if that amount is more than 20%, it's a sign that your debt is out of control. We want you to bring that debt down to 20% or less. That's going to be very beneficial for you when it comes to time to go ahead and get that mortgage. Your credit score is going to look much better. Your debt ratios and everything is going to present better. And you're going to save more money on your monthly mortgage payments. So that strategy is going to help you in two ways. Also, the second way now, it's going to free up more of your money because you'll be spending a lot of extra money on those high interest payments. You're just throwing it out the door. So get your money working for you, reduce that debt, let's invest and let's move forward. Yeah? All right.
So how do they come up with that extra money to pay down on those debts, right?
Yeah.
Let's call it the shakedown.
Yes, the shakedown. So simplification is a wonderful debt freeing strategy. It's a great strategy to help you to build wealth, or experience more financial freedom. What we want to do is we want to have a look at our non-essential expenses. So these are expenses where it may include things like going out for restaurants, spending money on cleaning services, lawn maintenance, hair, cigarettes, alcohol, lattes. Have a look at your phone plans. Maybe there's some things you can eliminate and cut back from there. That could just alone could save you $100 or more. Have a look at your insurance. Car insurance, life insurance, and perhaps reducing the deductible is going to help to free up some more money for you. You can use that free cash and you can reduce the debt and then start using the money to invest. Put it together to help you to build your deposit.
Great, that's an awesome tool, and I think that just switching the mindset from consumer spending into putting your dollars into asset building is a really good thing to start building in terms of even maintaining your property and how you treat your cash flow.
Mm-hmm.
So that's great ways to create extra cash flow and put down that monthly debt, which is gonna free up cash and help you get a better mortgage rate.
Mm-hmm. Mm-hmm. All right. So
Okay, so yes, so now that we've spoke about consumer debt, what do you think about, and this is a reality for a lot of people, using debt sources or credit sources to come up with your down payment? Do you
great.
think that's a good strategy?
I do. I do. This is leveraging other people's money. All right. So a very, very viable strategy and something that many of us have had to do was go into a line of credit, go into a credit card, and help to utilize that money, leverage that money to put towards your deposit or your down payment. Right. So it's money that is going towards a progressive debt. It's going towards an asset. It's a healthy debt. You want to make sure you have a plan or a strategy to pay it down, because we discussed about making sure your ratios are appropriate for when you're going for your mortgage. But it's definitely a strategy you can use, and it really is like how you mentioned, considering, is this money being spent towards something that is just a consumer purchase, something that doesn't have much long-term value for you, or is this something that's working as a seed to help you to build and grow your financial freedom, your wealth, your generational wealth? So absolutely, as a point of leverage, go for it if you've got it.
Yeah, and that with a strategic plan on paying that back with healthy debt ratios, it's a small amount could definitely top up your down payment and make you have access to those low deposits that you mentioned.
Absolutely. Another great strategy, of course, is talking to friends and family. What I suggest, of course, is creating a win-win situation. So let's say you have most of the deposit ready that you need, but you may be $10,000 or $20,000 short. Go ahead, talk to a friend, talk to a family member, and say, hey, I need that $10,000. I'll pay it back to you with interest. So now you're creating a business opportunity for a loved one. And it's also helping you to get ahead and start to build equity and expand your portfolio. Yes. Another point, of course, is we call it the bank of mom and dad. But this is something that you can utilize if you've got properties yourself, right? It's leveraging, again, now some equity that you have in a property. So perhaps, a parent purchased a property 10, 15 years ago in Mississauga. They will have hundreds of thousands of dollars of equity. We consider, of course, real estate as a very viable wealth building tool. So this is a point of leverage to help you to expand. You can go ahead and ask mom or dad to refinance. And can you speak to that a little bit?
Yeah, definitely refinancing equity and is a huge strategy for people, home investors who are expanding their portfolio. So when you do an equity pullout at a great mortgage rate, it makes such a small marginal difference in the monthly mortgage payment, and you had access to such a large amount of cash flow to now put towards another property. So this is the number one way that people usually expand into their second or third property. And this could be an opportunity for you to hit up mom and dad and be like, you're ready to take on the responsibility of home ownership, a good family friend, and make a plan on how you can use that equity pullout towards your first home purchase and create a strong investment for that person as well.
That's right. And as you said as well, with expanding your portfolio, if you already own a property, you can go ahead and have an appraisal done, see how much equity you have in a current property, refinance, and then keep building. All right. So just a reminder again, next Thursday, August the 29th at 8:30 p.m., we will be having a webinar. We're going to be reviewing those low deposit, extended deposit homes. We're so excited to share that information with you. And we're also going to be going into further detail on a few points here. So registering for our webinar is going to give you a chance to access an outline of everything we're discussing today, and then again get into some of these points. So Annalay, can you speak to the CMHC incentive program?
Yes, so that's really exciting. Starting September 2nd, applications are coming out, and the government has created through CMHC a first-time home buyers incentive program, which allows pretty much what we're talking about, you to do business or partnership with the government. They will take about 5 or 10% equity stake in your property, but they've given you 5 or 10% towards your down payment to reduce your monthly mortgage and make home ownership a lot easier to maintain and easier to access. So the applications do come out September 2nd, and during the webinar we are going to go into details about the application process and some, pros or cons that some people have suggested about it. You are sharing about 5 to 10 future equity with the government, but you still maintain 90 to 95% ownership. So for many people, this is a great way to get in and have the support of the government behind them.
Excellent. And RSP loans, not everybody is aware of this strategy.
Well, this is a strategy that one of our financial advisors has used with many of his clients. And so what you can do, depending on your debt ratio, and of course working closely with your financial advisor, and we could always suggest one for you. What we do is if you need a little bit of a top up, you can do what's called an RSP loan, where you're looking at a very small interest. You take that loan and you deposit it into your RSP to take advantage of the RSP first-time home buyers program, which you now can access up to $30,000 worth. And then you take that, it's a 90-day process, and then you can use that towards your down payment. And then you're taking advantage of the repayment program of the 25 years of that program, and then you're also taking advantage of that low interest rate for the RSP loan. But this is definitely something we advise that you sit down and work through with your advisor.
Excellent. Great. Okay, and another strategy here is joint ventures. All right, so similar to the partnership with the government or partnership with a family member here is we always suggest you have a lawyer. So you want to create a very clear outline about how you're going to go about approaching this partnership. So joint ventures don't always have to be a 50-50 ownership. It could be the same scenario, you're just $10,000 or $20,000 short. And so the person that's giving that little bit extra, maybe they only own 10 or 20% equity in the property, and that's perfectly fine. You'll set out your strategy. So for example, maybe after 3 years, you plan to sell, or maybe after 5 years, you're gonna buy or hold, but you'll do an equity takeout and refinance, and then split the profits. So again, it's another strategy of partnering with your community to help to build generational wealth, to help you to get into that next property and expand your portfolio.
Yes, both parties or all parties involved can leverage off of each other, and they work it out, and it's a great way for them after that first property to possibly get into owning their own full 100%.
Exactly. So here's our last point now, and it's leveraging your own talents. Okay. So this just means perhaps, starting that business you've always been dreaming of starting, cleaning, lawn care, doing hair, perhaps picking up an extra shift from work or taking out more overtime. Right? We just want to utilize some strategies to get your hands on some extra cash. That combined with our simplification shakedown, with reducing your debt, so you're saving your money towards those interest payments, and being able to really strategically put together more of a sizable down payment so you can get into your next property.
Yes. And so we'll be going over that and some low deposit opportunities on our webinar on Thursday, August 29th. So like Stephanie said, the link will be provided. So we hope that you register and we come with your questions. We'll also be sending out a little PDF with some points that you can go over. And if you have any questions, you bring them on Thursday.
Yes.
Yeah.
All right, guys. So we will see you then.
Awesome. Thank you. Bye.